And you talk about gold revaluation, it's not a conspiracy theory. I mean, read the Genius Act. I think Section 9 or Section 10 talks about next year they'll revalue gold. Now, some say market to market. James Rickards is going around saying, I think he says 24,000 is the number he comes up with. We don't know what that number is. Either marking it to market because it's on the U.S. government balance sheet at $42.22 an ounce.
Okay.
Either remarking it to market, or as others say, Mike Maloney says 10,000. He uses M1. Rickards has a different metric, says 24,000. Right. Who knows where it goes to? But that is the theory. The central banks, the commercial banks, the massive deliveries into COMEX, these people that are bringing in billions upon billions upon billions upon billions every month for the last year, since last November, they don't do this just for the hell of it. And as you've noticed, since all of this gold's been coming into the country, isn't it interesting to see that gold is up 50 plus, 60%? Right. They don't do it just for the heck of it.
Something massive is unfolding in the gold and silver markets right now, quietly, strategically, and almost entirely behind the scenes. Central banks are buying gold at the fastest pace since the 1960s. Global vault construction is accelerating. COMEX and Shanghai are experiencing delivery volumes we only see during crises, and governments across the world are rewriting monetary rules in ways that all point toward one outcome: a global gold revaluation and a complete repricing of silver. From Kyrgyzstan launching a gold-backed digital currency, to China choking off metal exports, to new U.S. legislation explicitly referencing gold revaluation, something big is happening beneath the surface. This isn't just a bull market. This is the foundation of a new monetary system being built right in front of us. Today, we break down Andy Schectman's warnings, the latest global data, and what every gold and silver investor needs to understand now.
With this sharp correction, when you talk about silver, it's up over 65% this year. And gold is up over 50% this year, even with these pullbacks. But to me, it's not even as much who or why as it is what. Why would anyone do that? There's just no possible explanation for why anyone would dump it at a period of time to trigger all of the selling. It's a drive-by shooting. It's done for effect. Maybe it was rescuing stale short positions for one entity or an opportunity for others. But the bigger question is, why even do it to begin with? It would be the least opportune way to maximize this massive gain that you would have had if you're selling, unless that's not what it was. You look at the central banks, and their numbers are usually backed up a little bit, but in September, they bought 39 tons of gold, which was up 79% month over month, and it's the highest month of reported net buying in 2025 so far. And you're continuing to see massive amounts of gold bought across the board. You look at Tether. Now, I've talked a lot about Tether and their role in the stablecoin legislation and how they are buying gold and Bitcoin with their profit. Their numbers on their third quarter balance sheet are almost 13 billion in gold. They're buying gold hand over fist. Wow. When they issued these stablecoins, to back whatever it is that they're doing, they're backed by U.S. Treasuries, and the interest on those Treasuries is not transferable moving forward. And they will put more and more into gold. They were just at the Beaver Creek Mining Summit, so they're dealing directly with the miners now as well. And so I think whether you're talking Tether or the central banks or the massive deliveries into COMEX or the massive deliveries in Shanghai, at the highest level, you're seeing a quiet rush for physical possession, huge amounts. And I don't know, I just think that this inventory problem will only get worse. Now, it's ironic that we haven't seen it as much on the retail level, but we're beginning to in certain areas. And I don't know if there's any coincidence or just it's the inefficiency of the U.S. Mint, but the U.S. Mint, the product availability is horrid and the premiums are out of control. Now, is there an arrangement for the Treasury to buy that gold? I don't know. It wouldn't surprise me when you put Bo Hines in there. It's no different than putting Stephen Mirren in the Fed, who is the architect of the Mar-a-Lago Accord, which again speaks to a devalued dollar. And you talk about gold revaluation, it's not a conspiracy theory. I mean, read the Genius Act. I think Section 9 or Section 10 talks about next year they'll revalue gold. Now, Some say market to market. James Rickards is going around saying, I think he says 24,000 is the number he comes up with. We don't know what that number is, but raising gold to that level not only devalues the dollar substantially, but gives the Treasury General account a huge boost of free money that would come in the form of selling or giving the gold certificates to the Fed, and they just print money out of thin air and give it to the Treasury. We can go into how that works if you want, but the bottom line is it devalues the dollar. It gives a large sum of money to the Treasury that can work down its debt. And then you throw in Judy Shelton pegging the back end of the bond market. You bring back manufacturing at no upfront borrowing costs. Is it the way to do it? I don't know any other way besides full-on default or hyperinflation. This is kind of a third option, soft default on the dollar.
Okay.
And, but one last thing, you look at, I'm going to butcher the name of this, Kyrgyzstan. Yeah, their government has just officially registered a U.S. dollar. It's USDKG as a stable coin, pegged 1-to-1 to the dollar and fully backed by gold reserves under state control. And so we're seeing gold move into the monetary system. And that's the bottom line. Whether the central banks, the commercial banks, the massive deliveries into COMEX, these people that are bringing in billions upon billions upon billions upon billions every month for the last year, since last November, they don't do this just for the hell of it. And as you've noticed, since all of this gold's been coming into the country, isn't it interesting to see that gold is up 50 plus, 60%? Right. They don't do it just for the heck of it. Marking it to market because it's on the U.S. government balance sheet at $42.22 an ounce.
Okay.
Either remarking it to market or, as others say, Mike Maloney says 10,000. He uses M1. Rickards has a different metric, says 24,000. Right. Who knows where it goes to, but that is the theory. Gold and silver have been money. Now, I don't think we're going back to a system where gold, and so you could argue maybe in some of the individual states, we're going like Texas and Florida, I think you will deposit your metal into a state-run vaulting system, and they'll give you a credit card or something on your phone. I don't think we're going to go around using gold and silver as money anymore, but I do think it's going to be reintegrated, especially gold, into the monetary system in other ways across the globe. The bottom line is gold and silver are becoming far more important than they have been in a very long time. And I think there is the realization that in a system that is based on trust and nothing else, I think it's past its prime, and people are moving to something that is far more trustless, and it will be some sort of a marriage between blockchain technology and physical precious metals, I think, as a way to reinstill, kind of like they're doing in Kyrgyzstan, to reestablish trust and confidence in the system. And Kyrgyzstan is they're in the Eurasian Economic Union. They're close with Russia. They're close with China. The rails are being built to, I think, use gold or gold-related bonds to take the place of U.S. Treasury bonds. And there's a very interesting theory right now going on between Vince Lancy and Eric Young, and that's exactly what they think is happening right now. That there is a huge spike in warrants on the Shanghai Futures Exchange, and like almost over 100 tons or near 100 tons, but that he believes that and there's also a massive amount of silver that Russia is no longer exporting that hasn't been accounted for, a huge amount, and there's no one knows where it is, of gold that they used to export as far as recently as 2024, and that they believe, along with Russia issuing a yuan-denominated bond next month, that they are going to move it to the Shanghai Metals Exchange vault in Hong Kong, their new vault in Hong Kong. Remember, I've talked to you about how they're building vaults all around the place, but to take gold out of China has to go to Hong Kong, that they're moving it there to act as a repo facility. And so to act as a repo facility that will be an alternative to the U.S. dollar. Now, these guys are cutting edge, Eric and Vince, and I wouldn't discount what they're saying. So any way you look at it, and when I say gold, I mean silver too, but gold has a more prominent role in the workings of the monetary system. Silver's just been viewed as critical, and by the people who understand it, they know they need it. But both Vince and Eric think that gold or a gold-denominated bond will come out of Hong Kong as part of a new offshore repo collateral system, and that will be a massive blow to the U.S. Treasury market, is what they're saying.
Andy Schectman has spent years warning that global trust in the Western financial system is cracking. And now, the world's most powerful institutions are acting exactly as he predicted. Gold is still officially valued on the U.S. balance sheet at just over $4,200 an ounce. But analysts like Mike Maloney and James Rickards estimate a revaluation between $10,000 and $24,000 if the U.S. marks its gold to market. Such a move would instantly devalue the dollar and inject a massive accounting windfall into the U.S. Treasury. In Andy's words, it would be a soft default, without collapse or hyperinflation. Recent market events support this possibility. Gold has repeatedly broken new all-time highs. Silver has surged past $50 multiple times. On COMEX, more than 15 million ounces of silver were delivered in early November. During a non-delivery month, Shanghai is seeing aggressive physical withdrawals, and industrial giants, likely in EV and tech, may be quietly standing for delivery inside COMEX vaults to secure future supply. External analysts confirm what Andy is seeing. According to the World Gold Council, central bank gold purchases in 2024 to 2025 are the strongest in modern history. Luke Groman and Zoltan Poser argue that a new Bretton Woods III is emerging, where gold and commodities replace treasuries as collateral. Russia's upcoming yuan-denominated, gold-linked bond and Hong Kong's new sovereign-grade vault point toward an alternative settlement system forming in the East. Meanwhile, silver is becoming the most strategically important metal in the industrial world. The U.S. has officially labeled silver a critical mineral, and China has restricted silver exports. Mining output from Mexico and Peru, the world's top producers, is declining, while demand for solar, EVs, batteries, and technology is exploding. This is creating a structural deficit that's tightening far faster than the market realizes. Andy's message to investors is simple but urgent. This is not speculation. This is positioning for the next global monetary system. Physical metal, not paper contracts, is quietly being pulled from the system by governments, institutions, and industries that understand what's coming. He emphasizes that investors should treat this moment as a gift, an opportunity to accumulate undervalued, essential, and irreplaceable assets before the revaluation becomes official.
In November, just through the first few days of the month, there were 3,029 contracts delivered of silver times 5,000 ounces. That's over 15 million ounces of silver delivered. That's a torrid amount, but this is not even a primary silver delivery month, and it shows huge volume in a non-delivery month. But, who's to say that Tesla or Samsung or Sony haven't been behind some of the massive deliveries we've seen to COMEX, because not all the silver's leaving. It could just sit there in a vault until they need it, but it's no longer available. It's in a not the registered account. It's set aside safely, and who's to say they're not there? But to your point, what's very interesting is, as Sean Kuhn, the CEO of Dolly Varden, has told me that, as I probably mentioned on your show before, that China is doing this as well. They're flying to Mexico and Peru in particular and buying doré and concentrate directly from the miners to disintermediate the marketplace. So there's a lot going on under the scenes that, under the scenes that we don't know who's doing it. But the fact that you're seeing all of these deliveries, I would argue, to your point, that there probably is a lot of the industrials. Now, it's interesting, real quick, you bring up one very interesting point, and that is this. Here's the stage that is set for a massive battle. You have the industrials, Tesla, Samsung, whatever, Sony. You have the hedge funds. Oh, they smell blood in the water. And now the third and fourth piece to that puzzle, U.S. government just officially lists silver as a critical mineral, putting a floor under the price. And China is now limiting exports moving forward. There is a battle going on, not only to drain the world's exchanges slow enough as to not cut off your nose to spite your face so everything blows up. And now you have governments acknowledging that this is more about policy now, not just national security and policy, on top of the battle between the industrials and the investors It's setting the stage. And when you realize just how small of a market cap silver has, I don't tell people to buy silver to get wealthy, but it has enormous upside if you realize that you start throwing government money into this and putting a floor under it and limiting exports. Yeah, the potential for silver is quite enticing. I mean, you could argue it's parabolic. Silver comes from Mexico, Peru, and Canada, and it's interesting. I mentioned Mexico and Peru. The Chinese are going right to those miners and saying, we'll pay double what the West will. We want your doré, which are the crudely refined bars. We want your concentrate, which is the byproduct mining sludge. Right. And we'll pay double. We'll send it back and refine it ourselves. Now, this is coming from the second largest producer of silver on the planet. David Morgan will tell you when he went there to tour the mines, China told him we're number one, we're not number two. Whatever they are, they're massive producers of it. And they're flying all around the world to buy stuff and refine it themselves when we almost entirely need silver. When we need silver, it's almost entirely coming from other countries. We are reliant upon it on other countries, and that is a fragile supply chain. It's not a good thing. At the same time, you got China building deep water seaports in Peru and trying to build their infrastructure. I mean, there is a game of chess going on right now that people really aren't seeing, and that game of chess is who can secure all of the world's commodities. Shh, don't tell, do it quietly, don't freak everyone out, but this is a battle of gaining supremacy on the commodities of the world. It's shifting from paper promises by the West into who's got the goods around the globe. There's some institutional traders that see a massive breakout in gold in the next few weeks. And I'm not saying it's going to happen, but we just saw a $96 million coordinated call block, it's called, just hit GLD, which with calls expiring in December. This means that an institutional investor or multiple funds in coordination just bought roughly $96 million worth of GLD call options.
Okay.
And a call option profits when the price goes up. And with the December expiration, they're betting gold rises within weeks before those options expire. And when you call it a coordinated block, this means that one or several large orders are placed together. And this suggests intentional institutional positioning, not retail speculation. So in plain English, this means that someone with some serious capital believes gold will move sharply higher soon to put a $96 million bet on it. And then you look at the deliveries we've seen in October, which is a pseudo delivery month in gold. It's turning out to be maybe the third largest delivery month in all of 2025, and it's not even a primary delivery month for October. And November deliveries are again, as I mentioned, off to a big start. December is the big one, where both gold and silver are delivered in December. So it might have something to do with that and how much of it will be delivered. Mm-hmm. It may have something to do with the Fed pivoting and lowering rates again. I mean, all I can tell you is that everything that I see is very bullish, and I try and be as open-minded as possible. I'm not married to the bull. I just simply think when you look at the positioning of the biggest money in the world and all the actions going on by the governments around the world, it's hard not to be when you look at this from a big picture. I think we'll know more first day December deliveries. What interesting thing is that we've been seeing huge amounts of mid-delivery cycle deliveries where immediate contracts are issued for delivery, like record amounts. And that happened right around the time when the market got nailed down a couple weeks ago, where the majority of contracts that are going to deliver are announced on the first day of delivery. But then 3 days in a row, we got records. Something like 6,000 gold contracts were issued over 3 days for immediate delivery. That normally doesn't happen. Normally, yeah, we're going to stand for delivery, but on the 15th, 16th, 17th, or whatever of the month, when the price got nailed down, immediately you have all these contracts that are purchased and will stand for immediate delivery. So there's a lot going on with delivery that is maybe not as easy for people to gauge just by looking at the first day delivery. But I would argue that would probably be a very big one in December, and that will answer your question largely. Who took massive positions and is having it delivered into COMEX? Doesn't mean it's leaving COMEX, but it's under their control within the COMEX ecosystem in an eligible account.
We are witnessing the early stages of a global monetary reset. Central banks aren't buying gold for entertainment. Governments aren't tightening silver supplies by accident, and trillion-dollar institutions don't place massive gold bets unless they see something crystal clear. Physical gold and silver are being removed from the open market and repositioned as the foundation of a new financial structure. When the public finally realizes what's happening, it may already be too late. If you found this breakdown valuable, make sure you subscribe, hit the bell, and share this video so more people understand what's unfolding behind the headlines. And here's my question for you. Which metal do you believe will shock the world first? Gold through an official revaluation or silver through a supply-driven explosion? Drop your answer in the comments. I read every one. Stay sharp, stay informed, and I'll see you in the next video.